Yo, what's up, guys? It is Hacker back with another trade recap. I hope you all are having a blessed day. God bless. Let's dive into it. But actually, before I dive into it, I do want to say something. A lot of people, if you feel you trade similar to me or you get a lot of value after my trade recaps, which I hope all of you do, I hope all of you enjoy them, and I'm so thankful that you guys watch them. If you want to get better, if you trade similar to me and you want to get better at just trading, executing, when you see me taking these A++ setups, A trades, A plus with 5, 6, 7, 8 confluences, the best way to do it is literally like this. Watch my trade recap on another tab or another monitor. Have that price action up from that day. I usually have the title in the video. You can just look at the date of when the video was posted, because when I post trade recaps, obviously it usually is a recap from that same exact day. Go to that day of price on the 2 minute, 5 minute, 15 minute, whatever time frame you want to be on. I break down my bias. I break down the higher time frame. I break down the middle time frames, like the 15 minute, 30 minute, 1 hour, what I'm seeing, and what drives me to take the trades that I take. And then I obviously go in and I break down all my confluences. Go to that day of data, look for the same confluences that I'm talking about, and then you will literally be able to see the exact A+ setups that I take. You can then store them in your back testing wherever. I hope you're back testing and I hope you're collecting data. Those are two things that should be non-negotiable. If you were doing both of those, you can now see what setups I am taking, how I am taking them, and then next time, now you're just waiting to look for them. And it can simplify the game of trading for you so much. But yeah, without further ado, let's get into this trade recap. First, as always, let's start off with the bias. This bias might blow your mind. Let's just go over it. So into 921, I go wholly buying off the low. Volatile here, draw on liquidity taken. So draw on liquidity taken at 922, just 8 minutes before open. I'm actively watching the charts, right? I'm forming my plan, and I'm seeing the buying come off this draw on liquidity. Now, it's not unusual, but I mean, when I say buying, this is buying. I mean, I'm watching the flow come in. I'm watching the orders hit the market. And I'm saying, okay, I think we really are going to defend this low. I would be surprised at open if we just dumped right through this. Then we get the confluence to take the trade and make money literally in 8 seconds. Into today, I am feeling pretty neutral. Again, I was neutral, as I explained the next sentence, for a reason. As we take out the clear draw on liquidity, the best way to describe it is that I'm expecting a bounce / manipulation at open, as we see good buying off this draw on liquidity. But overall, I want to continue to see lower. I've been saying all week we're going to target this 28,740 area with this candle from last Thursday. I think we're going to target even as low as the 530s, 550s. I actually expect the markets to retest closer to the 28,000s in the coming weeks. That could even happen this week, but I think it's going to happen by the end of May or very early into next month. Now, I do say here, 740 is my main target, and towards the 500s into today, tomorrow would not totally surprise me. So now, let's dive into how the trading day went. First, let's just jump over to price, show you guys what we did overnight. I know there's a lot going on here. Asia did come down. In between Asia, you see London did make a move up and then eventually dumped towards the end, right? So this is a draw on liquidity that I'm referring to. We take this draw, as you can see, right about 9:15 is the 15 minutes. So if I go to the 5 minute, you're going to see us take this draw at 9:20, 9:25. Now I'm watching the flow come in. I'm watching the buyers step up, right? This is already a huge area that I have marked out for the day. I want to see how we react off of this area. Again, so on the higher time frame, we have our bias, as well as us being at the bottom of this huge 4 hour and continuing to buy this up. Basically, this whole area from the 930s to the 750s is a huge area for me, because if we lose this area, and it looks like we're trying to see a really clear sell model here, really staircasing down with a lot of momentum on the 4 hour, you see all these huge wicks that we're leaving behind. Standard deviation is making it very easy to target all of these lows. And then obviously we had a small reversal here and then right back down. Again, just looking at this curve, guys, we should see the 28,000s. Look at how long it took to get from here to here, about May 4th to about May 11th. It took a week. Obviously, that's insane, 1,400-point move. I'm not saying we're going to fall just as fast, but our next objective definitely is the 500s. And from there, if we lose this area on the 4 hour with confidence, look, on the 4 hour, we don't have too much stopping us from falling. I mean, obviously, you're going to run into some daily candles, but if we really close a confident 4 hour into the PM session here and into tomorrow below the 700s, we should definitely see this. And even if we chop around a little here, if we don't bounce pad off of this 500 area and go right back towards 29,000 with confidence and actually close confident candles to the upside, we should continue to fall. But anyway, that's kind of a projection of what I see in the next week or two. So there's that. But yeah, broke down the 4 hour there, the 30 minute. Let's go back to the pictures. 4 hour, right? I know it's messy, but it's kind of, I don't trade on the screen for a reason, because it's very messy. It's just kind of where I mark out levels. So yeah, we had our trendline liquidity just overall the whole week. Last 2 weeks just kind of pushing us down into this 4 hour gap. And then you can see that yellow line down here, whatever color this is. I'm a little colorblind. I am colorblind with some colors. That I think this is yellow. This is our clear draw on liquidity in that 740 area. That's what the 30-minute looked like right after we took that sweep. So now let's go over to the chart, and you guys can see how we actually made this money in 8 seconds. I didn't get my copy trader on. It's okay. It's fine. I'm really not worried about it. But we made $782 literally in closer to 8 or 10 seconds today. Absolutely nuts. So we get that confirmation, right? We have the manipulation on the lower time frame and the higher time frame sweep. We know this is a big area. We know that we want to jump off this area. We see all the buying coming in. Like I said, order flow plus rapid buying off sweep of the clear draw and liquidity. We get a 1-minute break of structure here. Now I want you guys to look very closely. On the 15-second, 30-second, you see the EMAs cross on both time frames here. Got to go back over. That's why I don't like changing time frames that much. 15-second, 30-second EMAs cross on both time frames, as well as look what happens here. We have a 1-minute gap, right? 1-minute fair value gap right here. If we wanted to go lower, we probably should hold this. And we should probably, chop right into here, reject the EMAs, and then take the new low of day. But with the buying I saw, I knew that wasn't going to happen. We have 4 to 5 confluences already. The EMAs are crossed on the lower time frames. We want to now target opposing side of liquidity. My bias was to see manipulation to the upside to then come back down. As you can see, we had ideas for both of that. We caught this trade. We did not catch this trade, but I will get into that. And yeah, I mean, we had the 4 or 5 confluences, right? We had the manipulation on the higher time frame as well as the lower time frame. You see the manipulation, you see the rapid buying, you see this immediate 1-minute candle right into this 1-minute gap. You see us close right higher. EMAs cross on the 1-minute as well as the 15-second and the 30-second. We take our entry here. We are risking now, if we want to inverse this 1-minute candle, we have to give it room to inverse. Theoretically, you could take this as a 1-to-1 and just risk to low day. That's completely fine as well. But because I've backtested these types of setups off the manipulation, taking longs, especially off of open, honestly, I will say one thing about these volatile market conditions is when we know where we want to go, we kind of just go. We don't really see too much manipulation, then resweep and then go higher. We kind of just, we blast off. So that allows me to actually not put my stop down here. Again, you could have, and it's still a 1-to-1. But I actually, you could say it's greedy, but to me, what I've backtested, I can actually put my stop right below the 1-minute inversion, give it some wiggle room, and catch a 1.5, 1.6 RR and not have to risk as much. This was an 8 micro trade. This was a really good piece. We caught closer to about 46, 48 points. Initially, I thought it was 42, but it looks like Topstep actually gave us some extra money with our fill because it was such a fast candle. They filled us a few points higher, which was really cool. And yeah, I mean, that was the setup. So again, we checked all the boxes. This was an A setup. This wasn't even an A plus setup, but with 1.5 R to start the day with a clear draw, wanting to target and see manipulation higher, I was completely okay with the setup. So yeah, risking about $450, $500 there, maybe a little less. Yeah, probably closer to that. But I was very confident in it. I did take it on account with more draw with obviously a little more buffer for that reason. And yeah, that's kind of how we went about it. So that was the first trade we caught. We went up, right? We absolutely mooned. I mean, this ended up being literally a 210-point move. That is one thing I want to get better with is holding my trades. I did want to TP because I was on 8 micros on a pretty volatile day. But even if I trimmed half there and I wrote it out to this liquidity, which probably would have been a better option, I definitely would have TP'd here. I don't know how much higher I would have targeted. 90 points would have been more than sufficient. 3 RR at that point. I will say, and I will just confirm, I'm not just saying it after the trade. I did try to drag my TP on this trade and take a little more. I would have dragged it at least 20, 30 points higher and then taken a little size off and let it run from there. So we could have made extra money again. I'm not that type of person. I literally told my live stream today, like, I'll talk about the concept of extra money for 2 to 3 seconds and I completely move on from it because I don't like being that type of person. What happened. We're green. We made money. We're blessed. Like, literally made close to $800 in literally 8 seconds. We have nothing to complain about. And then on the 2-minute, really just started to chop around, really got ugly. I did break this down to my crew as well. Here was the trade, right? Really nice longs. 150 point ripy in 4 minutes was insane. Didn't take this setup. We were 1-0. We missed this. We didn't get this. And I'll explain why right here. Prime example of an area where you want to get your hands off the keyboard. Fat 2-minute gap and rejections of upside moves. And then also, sorry if I'm about to sneeze. And then on the 2-minute, 5-minute, we have those fair value gaps resting below. So we have clear reasons to come. We have clear gaps above that want to push down on price, as well as, we want to see that manipulation higher. We got that manipulation higher. So we technically don't really want to see the highs retested, in all honesty. But then again, we do have the 2-minute, 5-minute gaps below, resting below. We already swept liquidity low. So if we wanted to go higher, revisit the 0.5 of that range, and then continue to go higher, that also wouldn't be crazy either. So I say here, do not get caught trying to be a hero in the middle of the range. Do not force a trade in the middle of this range. And then we go back to here. Unfortunately, we did miss this trade. Now, guys, this setup for 83 points, that ended up being, as you see, 200 plus. This setup to this clear draw on liquidity was so beautiful. And I honestly probably could have taken it for an A, even just on 3 to 4 micros just to participate and take it because of how good of a trade it was. I did try to get a 15-second inversion so I could size a mini on this. 20 times 80, you can do the math. That's the trade. That's what this trade would have been to this draw on liquidity. 2 RRs, so we would have been risking closer to $700, $800. Basically what we made on the first trade. Probably copy traded on 1 to 2 accounts, maybe even 3 or 4. So maybe I wouldn't have risked a mini. Maybe it would have been closer to like 7. Depending on how many accounts I copy trade, my size would move, especially with the volatility today. But we had this clear draw on liquidity. You guys will see this draw here, right? That was our 740 draw that I wanted to target. Let's go to the 5-minute, make it a little more obvious. Into 1010. This is the draw that I wanted to take, right? 1008, 1010. So this is the trade. This is the area that I wanted to trade to. The 740 draw actually is down here, so 140 points. I would have been okay, especially if I sized, closer to 7, 8, 10 micros. I would have been okay with just targeting back to basically the pre-market open lows, the 926, 927 lows. I like targeting them as draws on liquidity, and even like the 930 open candle. I mean, obviously the 930 open candles, that'll come into play. I'll explain why. So the 930 open candle, when we move higher and then come back lower, I actually like to use it. If I'm not using it as a take profit, I love to use it as a break even. Now you can see that would have been the break even. So about 34 points in this trade would have been the break even. And then 83 points would have been the full TP, 140 if we're actually waiting for that draw on liquidity. And if this was our break even, once we got to this as our second TP, this would have been our trailing stop. And we actually never would have gotten stopped. And if we use that as a trailing stop, this was our second target. This was our third target towards the 740 lows. You could hold that, catch 140, not hit your trailing stop, and it be an amazing trade. After we take this, like I said, that becomes your trailing stop. We stayed under the EMAs on the 1 minute. A lot of selling confidence, even after these candles. To sell this back off after these candles is absolutely nuts. It's because this one manipulated the new low, came back to the EMAs, rejected it, and then traded back lower. I hope I'm not talking too fast, but I just see this so clearly. And I want you guys to be able to see it so clearly, which is why I make these videos. We're at about 12 minutes here. It's going to be a little bit of a longer one, but I'm going really in depth. So we have our clear draw on liquidity, right? Those pre-market lows and a higher time frame bias, like we talked about in our daily plan, towards bearish draws, towards that 740 draw on liquidity. That is where I was confident that the market wanted to go. We retested this 5-minute gap. We started to get really weak in this 5-minute gap. You guys can see here, this candle absolutely flushed it, but the 1 minute, 2 minute, really stacking. I knew we were going to push through this 5-minute gap. I was okay trading to the 5-minute gap because we had already 5 to 6 confluences. The EMAs were pushing down with confidence. We had a 1 minute gap, and we had 2 2-minute gaps at these highs pushing down on us. EMAs trailing, EMAs crossed under the VWAP. I actually don't even have that included here. Wow, this setup was even more beautiful than I thought. And then obviously we had the 15-minute rejection, as I'll show you. Standard deviation. Look at these candles. Oh my gosh. And you guys want to know why we're falling right now? Off of all the confluences that I already told you, this is exactly why. Look at the standard deviation targets. Right to about the 740s would have been about the 2.25, and then you could have full TP'd the threes off of this, even if you entered below the VWAP close here. I mean, how many points is this, dude? 250 maybe? Yeah, 275. Insane moves. Such volatility. Crazy volatility, which is why I'm more than okay than, and if I want to target 150 point moves, which I've caught before, 5, 6 micros, honestly, especially copy traded on 3, 4 accounts, is the perfect spot to do it. But yeah, I might have been a little too precise. I mean, there was just so much going for this trade where all I wanted here was a 15-second inversion, and this 15-second gap did confirm. All I wanted right here, guys, was this 15-second inversion. I wanted us to close lower, tap right back into this, and just absolutely flush. If we tapped into anywhere between this 880 to 893 area, the 0.5 of that 15-second, as well as you get the 15-second here, oh my gosh, guys, we would have banked. That's all you need to know. We would have been very, very happy with that trade, even with this ridiculous candle. Going break even, we thankfully wouldn't have been taken out if we entered right in this area. Yeah, and I mean, again, a beautiful setup. I just wanted one more confluence. Honestly, this 15-second inversion, again, that's part of my entry criteria, so I'm not going to go away from it. But since we did have clear 1 minute, 2 minute confirmation, it may have not been needed there. But it's completely okay. I'm just going to clean up my chart while I wrap up this video. It's completely okay. I'm more than okay with it. Honestly, that 15-second probably makes it A++. That probably already was A+, if not, most definitely A. But yeah, guys, that's the trade recap. About a 15-minute video. Went super in-depth about today. I said I was going to. I told my Discord that I was going to because today just had so much value. I hope you enjoyed this video. I hope you watch the whole thing with full intent to become better as a trader. You should be watching every piece of education with full intent to become a better trader. I hope you guys enjoyed this. God bless you. Enjoy the day. Peace.